Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 18th of December 2020. I have two wave counts, a bearish wave count and a bullish wave count, and for both I have a main and an alternate daily chart. The first bearish wave count expects that a multi-year bear market may be in its early stages to end below 1046 and my short-term target 1645, longer-term target 657. The second wave count is bullish for the bigger picture. I have two daily charts for that. The first expects the multi-month or multi-year pullback to continue, and the second looks at the possibility it was over at the last swing low. And when we get to technical analysis, we'll have a look at why. Also, this is in response to members' concerns. First wave count is bearish. It looks at the possibility that back here gold had a massive trend change, and there is a little technical or some reasonable technical evidence to support this possibility. And a target for super cycle C is to move below the end of A to avoid a truncation and to reach 1.618, the length of A, at 657. This wave count very obviously would be invalidated with a new all-time high for gold above the invalidation point. Let's take a look at how super cycle C could be beginning at the daily chart level, this point up here, this point back here. It doesn't have a clear 5 down complete at the daily chart level, so a new trend at super cycle degree should at least begin with that. We've got a series of 1, 2, 3 and now 4 overlapping first and second waves. Minuet 2 has continued higher, which I didn't expect. I thought it was going to be over here. It has continued higher, and it's found resistance at the upper edge of this acceleration channel. And that resistance has been respected again on Friday. Draw this channel from the end of intermediate 1 to the last low. Place a parallel copy on the end of intermediate 2. It was tested here and here, broke through here, but then quite quickly reversed, and it may be another test here. So this trend line has reasonable technical significance. Let's expect in the first instance that it will hold until proven otherwise. But as we see, a proper breach, even by a full daily candlestick of upward movement not touching the line, doesn't necessarily mean that price can't reverse back in. This is an important price point. Minuet 2 may not move beyond the start of 1 above 1964.66. And from a classic technical analysis perspective, from this high, there is at least a short to mid-term downward trend for gold with a series of lower lows and lower highs. The last swing high needs to be taken out for that view to change. And so, at least for the short term, while price remains below this point, a bearish outlook is entirely reasonable. The target for minute 3 remains the same, for it to reach 2.618, the length of minute 1. At the hourly chart level, the hourly chart focuses on the structure of subminuet C of minuet 2 and the very early stages of minuet 3 down, with a first wave complete, a second wave possibly complete, and a third wave down needing to complete next week. This channel, which I've copied over from the daily chart, is really important. While price remains above this trend line, the risk that price could continue higher and break above the upper edge of that channel on the daily chart will remain reasonable. If price breaks below the lower edge of this channel, then we can have some reasonable confidence that we may have a high in place back up here. Until then, the invalidation point has to remain all the way up here. The risk is quite high. Alternatively, for the first wave count, this is a more immediately bullish outlook, but it really doesn't have a very good look. For the first wave count, super cycle B really does need to be over there. But this is considering what if it's got one final series of highs before it's finally over. The problem here is within primary C, the disproportion between intermediate 2 and intermediate 4 looks absolutely ridiculous. It's okay for gold, particularly, to have fourth and second waves which are disproportionate, but only if the fourth wave is more brief and often shallow as well in comparison to its counterpart second wave. When you've got a wave count that's the other way around, that sees the fourth wave a lot more time consuming than the second wave, you should be very suspicious of it. I don't think this is the right wave count, but this is the only immediately bullish case I could come up for super cycle B to continue higher. Okay, let's look at the second wave count. This is a bullish wave count. It considers the possibility that the bear market for gold was over back down here as a grand supercycle degree 4th wave, and the grand supercycle degree 5th wave begins here with cycle 1, 2, 3, 4, and when that's over, cycle 5. I've got 2 daily charts today for this movement here. The first one will consider cycle 4 incomplete and continuing lower, as this weekly chart shows, and it may not overlap wave 1 price territory. This is the final invalidation point for the second wave count. The second daily chart considers the possibility that cycle 4 was over here, and as you can see, if it was over here, it's grossly disproportionate to cycle 2. If cycle 4 was over here, I think it lasted 19 weeks, or 17 weeks, whereas cycle 2 lasted over 110 weeks. So the disproportion is absolutely massive. Now gold will exhibit 4th waves that are more brief than its counterpart second waves, but that really is pushing it. It's entirely possible, and I want to be open to considering all possibilities. And for those of you whose own analysis is more bullish for gold, you may choose to follow that wave count. Let's look at the first one that considers cycle 4 incomplete, so it would have a normal look to its counterpart cycle 2. If it's incomplete, it may be unfolding as a zigzag with A incomplete, then a huge big bounce or big consolidation for B to come, and then C to move beyond the end of A. Within A, a series of 1, 2, 3, 4 overlapping first and second waves may be complete, and minuet 2 may not move beyond the start of minuet 1. The invalidation point, the short-term labelling, all of this is the same as my first daily chart, and it expects quite a lot more downward movement. Alternatively, it's also possible to see cycle 4 over here. Now I did try looking at this as a single zigzag, and it will fit A, B, ending expanding diagonal for C, but I'm going to label it as a double zigzag because double zigzags are reasonably common Elliott wave structures, and ending diagonals aren't as common as double zigzags, so this would be a more likely wave count. The subdivisions have a really good fit. So it is entirely possible gold remains in a bull market, and the pullback, or the time-consuming pullback and deeper pullback, was over back here, and the bull market for gold is resuming. In the very first instance, we absolutely need to see a clear breach of this channel to have any confidence in that view, and then we really should be waiting for a new high above this confidence point, a new swing high above this point for reasonable confidence in that view that the bull market for gold has returned. Because from this high, we still have this series of lower lows and lower highs so far. That hasn't been broken since back here in August, August this year. Okay, classic technical analysis now. Let's look at how the week ended for gold. The week's ended with an upward week. It's remaining above support at 1800. Gold did manage to break below that important support line from back here. It closed below there, but then it's immediately returned back above here. This upward week does not have support from volume though. On balance, volume gives us a bullish signal, but it's a pretty weak signal. This trend line only had 4 tests, but it's reasonably long held, and it's almost horizontal, but the break below this line weakens the technical significance. A break back above is a weak bullish signal because of this prior break below. The DX lines are whipsawing and ADX is declining. At the weekly chart level, there's no clear trend. ATR is now overall flat as price falls. RSI neutral, plenty of room for price to fall or rise. Stochastics in neutral territory, and MACD still bearish. At this high back here, strong upward movement. ADX reached very extreme. It reached above 45 and above both directional lines. RSI reached into overbought and there exhibited longer term double bearish divergence with price at these highs. And then we have 2 strong bearish candlestick patterns. The idea that there's a more sustainable high for gold must be understood to be a reasonable idea. We have a series of lower lows and lower highs off this high. If this swing high is breached, then this deeper pullback or more time-consuming pullback may have been enough to relieve extreme conditions and set the stage for the next bullish advance. But while this prior swing high remains intact, we have to understand it's also possible there has been a 180-degree trend change for gold. And this is one reason why I have those 4 wave counts, and I'm mostly going to sit on the fence, slightly preferring the bearish wave count because Elliott wave. Okay, we've been through this chart. Let's have a look at the daily chart. A little bit of concern for that idea though. We've got some upward movement here this week, and it was higher than I had expected, and it has support from volume. Gold doesn't always start out a new trend with strength, although this one here has a strong bullish engulfing candlestick pattern. Importantly, it did not have support from volume though. And to have really good confidence in this low, I really would have preferred to see strong support from volume for a bullish engulfing candlestick pattern. But now we do have a bit of support. These 3 days in a row of upward movement do have support from volume. Price broke below this important support line of 1850, spent some time below there, and now it's broken back above, and now it's moving back into this congestion zone with resistance about 1940, support about 1850. Upward movement of recent days does have support from volume, but on balance volume remains constrained, price remains constrained, and for this view of lower lows and lower highs to change, we need to see this swing high taken out. RSI is in neutral territory, plenty of room for price to rise or fall. ADX at the daily chart level also indicating no clear trend for gold at this time. Stochastics overbought. Price not, well, there is some resistance here, but the resistance above is at 1940. There's a bit of room for the upward swing to continue before price reaches resistance, but stochastics reaching overbought, while ADX is indicating no clear trend, would tend to indicate possibly the end of this upward swing here or very soon. That's all from me this week with your gold analysis. I hope all of our members are looking forward to a fabulous Christmas.